Hi, my name is Paul Meredith with CityCan Financial, author of Beat the Bank, How to Win the Mortgage Game in Canada. One of the most common questions that I get is whether you should go fixed or variable. So which is the better choice? The answer is there really is no clear-cut right or wrong here. It really comes down to the individual person. It's a very personal choice. I might suggest to one of my clients to go fixed, and then the very next person I speak to, I might suggest variable. Why? It's because it really comes down to that person's risk threshold. How comfortable do they feel knowing that their rate and their payment could potentially change with their very next mortgage payment, or it could potentially change in the next 6 months or the next 12 months or the next 3 months. I mean, it's really unknown. Where we are right now in the marketplace, we have not seen an increase to prime rates in September 2010. Now, this is one of the longest streaks in history that we've gone without seeing an increase to prime rate. Does that mean that we will go another 5 years or another 7 years or however many without seeing an increase to prime rate? I think that's kind of an unrealistic expectation. Given that, I think we've become somewhat complacent with prime rate not changing. Even with thinner spreads, the spread being the difference between the available fixed rate and the available variable rate at the time, even with thinner spreads, people have still come out ahead with variable rates, just as they have in the past. People have traditionally come out ahead by taking a variable rate mortgage. But that doesn't necessarily mean that this isn't going to change in the future. When the prime rate does increase, it can increase fast. Back in 2010, we saw it increase 0.75% within just a few short months, and there's nothing to say that that won't happen again. So will it go another 5 years without changing? Maybe. Anything can happen. Or will we see an increase to prime rate by the end of this year? Anything can happen. So the real choice comes down to how comfortable you feel with that. If you don't feel comfortable knowing that your rate and your payment could increase at any time, then a fixed rate mortgage might be a better option for you. If you do feel comfortable with that change, then maybe the variable rate is something to consider. If you're still undecided, a short-term fixed can also be a very good option as well. 3-year fixed is a very popular product, and there are some great rates available for 3-year fixed products right now. If you have any questions, please feel free to give me a call anytime or shoot me an email at paulm@citycan. And of course, check out my website at www.easy123mortgage.ca. Thanks for tuning in, and I'll see you next time.